On October 16, 1973, the rules of global reality were rewritten in a smoke-filled hotel room in Kuwait City. 6 oil ministers walked in and decided, without negotiation, that the price of crude would double, effective immediately. Within months, the largest economy on Earth was brought to its knees. Gas lines stretched for 5 miles, fistfights broke out at filling stations, and the stock market lost half its value. Today, in 2026, history isn't just repeating, it is screaming. The Strait of Hormuz, the choke point for 20% of the world's oil, is shut down for the first time in modern history. Iranian missiles are hitting tankers, insurance companies have pulled all coverage, and oil prices are climbing past $80 with no visible ceiling. We have deconstructed the energy weapon thesis, a forensic autopsy of 7 decades of crises, from Suez in 1956 to the 2022 shock. This is what the record reveals about financial survival when energy becomes a weapon of war. Lesson number 1. Energy stocks are not an automatic shield. During the 1973 embargo, when oil prices quadrupled, a basket of the largest American oil companies actually fell 35%. Even as Exxon posted record profits, the broader bear market swallowed everything. Investors who bought into the first week of panic lost money for over a year. The lesson? Real wealth wasn't made in the spike. It was made by those who held through the cycle. Lesson number 2. Gold is an easy money hedge, not a crisis hedge. In the 1970s, gold surged from $65 to $850, but it wasn't just because of oil. It was a perfect storm of 15% inflation and a Federal Reserve that had lost all credibility. Contrast that with 2022. Despite a massive energy shock and war in Europe, gold ended the year flat because the Fed raised rates aggressively. If the Fed fights back, gold stalls. Lesson number 3. The logistics layer is the true winner. History proves that a crisis doesn't reward those who own the commodity as much as those who own the path it travels. In 1956, oil prices barely moved, but tanker rates exploded 1,400%. Aristotle Onassis became one of the richest men alive in 12 months, not by owning oil fields, but by owning the only ships that could bypass the bottleneck. Today, with Hormuz closed, the logistics of 2026 are being repriced in real time. Lesson number 4. Beware of permanent inflation. In the 1970s, the government told farmers that energy-driven food inflation would last forever. They borrowed heavily against rising land values to expand. But when interest rates were hiked to 20% to kill the inflation, 300,000 farmers were wiped out. Real assets are a hedge, but debt is a death sentence in a shifting interest rate environment. The official story is always the same. It's temporary. The government has it under control. But history tells a different story. In 1973, Richard Nixon promised energy independence. It was a lie. Imports increased every year after his speech. The government didn't solve the supply problem. They waited for a recession severe enough to destroy the demand. In 2026, as 700 tankers sit idle outside the strait, the damage is spreading beyond oil. Natural gas production is halting, and major economies like India and South Korea are days away from running dry. This is not just a disruption. It is a fundamental restructuring of global energy flows. The question for you is not when the strait reopens, but how much economic pain the world will endure before the price of oil no longer matters. Position yourself by following the infrastructure, not the headlines. Deconstructed, analyzed, survived. Until next time, ego and empire.